So a lot of drama in the news. You have stock market up, stock market down, interest rates up, interest rates down. Russia's invading, they're not invading, there's peace talks. What does all this have to do with the real estate market? Well, let's take a look at it. I have to tell you, there's been drama in the news, and the dominating factor has been the invasion of Ukraine by Russia. It's affected political news, current event news, and financial news. But the bottom line is, how's it going to affect real estate? Rather than trying to scare you, I'd like to go through the factors, I think, that will show you that at the end of the day, I'll give you a hint now, at the end of the day, the market's still pretty good. We're going to go through the important factors affecting the market. Let's go factor number one, mortgage interest rates. I've said for a while, the thing driving demand is the low payment. When you can lock in a rate at historic lows like we are now, you're going to decide to buy a property if you're able to afford it. And yes, rates have gone up a little bit. Take a look most recently. We're in the 4.1 range. We've been in this range now for a couple weeks. Now, this is a higher than we've been over the past year to date. It's gone up. If this is the beginning of a trend that goes straight up, then yes, of course, the mortgage market's going to be on the sells. But if the market stays about where it is, then we should continue the activity that we have about right now. And no question that the Fed has jumped in recently and decided to take certain actions to prepare that the mortgage market should not affect, or the interest rate market should affect the overall economy. It's really important to keep in mind the historic standard of where we are in interest rates today. We're down below in the 4% range. And look at this history. I've been in real estate myself since 1986. I remember when rates pierced through 10%, it was, I don't know how to describe how big it was. It's like the landing on the moon in terms of finances. And you can see ever since rates have been on a long-term steady decline. Maybe they will continue once we pass through the pandemic, once we pass through this current war situation, hard to say. But what's undoubtable is these rates for most of my lifetime would have been unattainable. And because of that, I believe the interest rates will continue to make buyers able to buy a house at a price that makes sense for them. And when they lock it in for 30 years, even if there is inflation, because their payments locked in on these 30-year fixed rates, it will be a good deal for them in the long run. And let's keep in mind, unlike 2008, where over half the mortgages were adjustable, today almost all mortgages are fixed. So whereas in the prior housing crash, buyers were buying into a problem. They were buying into a crisis waiting to happen. They didn't know what the payment would become, and that drove many of them to lose their property. In this case, it's the opposite. If the worst thing that happens is inflation and everything goes up in value, if you've locked in your mortgage payment for 30 years, you'll be able to weather the storm. And I believe that's what most buyers are counting on and why they're so anxious to buy houses in today's market. So that's factor number one. Factor number two is the real estate market still continues red hot when we compare pending sales. And let's take a look at those numbers as well. Now, it's true that the pending sales dropped off a little bit here in the last couple of weeks. And you'll see, though, by the pandemic standards, this is the lowest we've been. However, when you look across history over the last, other than the artificial period before 2008, for the last 10 years, the current activity would be fantastic numbers or near the peak. So it's true the pendings have slowed down and we need to pay attention to that. But I think we'll find in the long run that those numbers will not indicate that the crash has begun. In the opposite, we're going to see that what's really happening is there's been a cooling off of the market and buyers are being a little more judicious with what they're buying. Factor number three, new home sales. Now, not such a big deal in California, except many buyers from California sell to move to other states, need a place to move to, and are attracted by new home sales in Arizona, Texas, Florida, and around the country. The problem is there's not enough new homes being built. You might have heard some numbers about the permits being way up and with a concern that will flood the market with more inventory. Not even close to the case. Take a look at the number of new home sales in the blue. It's dropped off. We're now below our pandemic levels. But look at all these years of low sales. And more importantly, if you look at the orange, look at the inventory. Look how low the inventory was during the pandemic and how it's still low by historical standards. So housing starts need to improve a lot. The numbers need to double before they'll even begin to feel the unmet demand in the market today. But there's no possibility that we're going to build so many houses that will cause a housing crisis. Again, unlike 2008, where people were buying properties on adjusted mortgages and they would buy 3, 4, and 5 houses because the payments were so low, that's not happening today. Factor number 4, the fear of foreclosures. I've heard this a lot. Now, it's true. The number of foreclosures has jumped dramatically to the highest level since the pandemic started. Since the pandemic started, but it's not high by historical standards. And here's the thing. It's true there are more foreclosures starting, but there's not many foreclosures ending. Now, there's still restrictions in California in particular and in Los Angeles County for sure. But not even that. Lenders have now changed their attitude. In the past, lenders handled foreclosures in-house and would foreclose on the property themselves. And with all the bad publicity from 2008, 9, and 10, they now outsource. As soon as the property goes in default, they sell the rights to collect the loan to another company. That company is typically a foreclosure company. That's all they do. They follow the paperwork on schedule to push the sale as quick as possible. Here's the key thing, though. With a dramatic increase in value across the country, in most cases, 40, 50% increase in values over the last 2 years, houses that would have been foreclosed on and sold short or at auction, there's still equity where the seller can sell the property, pay all the costs, and pocket substantial cash. In fact, I have not one but 2 listings of that case right now. I focus on probate. In both cases, the decedent had a mortgage. One was reverse standard. But in both cases, even though the mortgage payment continues while they go through the process of figuring out how to get it paid, the house has risen so much in equity that it's not going to go to a foreclosure sale. It's going to end up being a regular sale. So while foreclosure activity may go up dramatically on the starts, we're not seeing foreclosure sales rising at all. They're still not back to numbers before the pandemic and do not seem to be able to flood the market with bank-owned properties like we did in 2008, 2009. Now, the next factor, number 5, is the most important factor. I've talked about this week after week after week. In order for there to be a housing crash, in order for a bubble to burst, there have to be a bunch of houses ready to sell, and sellers can't get the price they want, and so they cut the price dramatically to avoid foreclosure. Is it happening today? Well, I don't see that. Nowhere close. Let's take a look. Excuse me. New listings this year are still amongst the lowest of the last 5 years, just tied 2021. But week after week has been the lowest number of new listings coming on the market ever. And so you can see that we're falling behind in terms of inventory overall compared to where the market would have to be. And so let's take a look at the inventory now. And you'll see where this is actually declining. The number of houses for sale is going down, not up. And compare it to 2021, 2020, and then the pre-pandemic periods. We had 700,000 plus homes for sale then. We have less than 250,000 homes for sale today. Unless this number dramatically rises above 800,000, 900,000, and becomes a significant drag on the seller's ability to sell a house, there's no way we can have a bubble to burst. There's no way we can have a housing crisis. So what does all this mean? I'm not saying be reckless. If you're buying a property because rates are low, make sure you get that low rate and you get it locked in. If you're selling a house, it's a great time to sell a house. You'll get the prices have continued to gone up. You'll still have multiple buyers looking for your property. Very important though, get them locked in so that you have the terms set. I heard a statistic the other day, less than a third of all sales close at the price and terms originally agreed upon. Over 2/3 end up being renegotiated. That's where a professional realtor comes in to protect your equity. So if I can help you, call me, text me, email me. I'm here to help you. As always, make this week